Welcome to today's Explainer. Today, we're going to decode the SASB Business Ethics Standard for asset management and custody activities. Now, I know what you might be thinking. When you hear Business Ethics Standard, you probably picture some dry, dusty compliance manual sitting on a shelf. But we're actually going to transform those pages into a fascinating look at high-stakes risk management. Because, let's be real, in the world of global finance, ethical breaches, they don't just cost reputations. They literally cost billions of dollars. Okay, let's dive into this. Here is our roadmap for today. We'll be covering 1. The high stakes of ethics. 2. Navigating complex regulations. 3. The cost of bad behavior. 4. Whistleblowers and controls. And finally, 5. Protecting shareholder value. Let's get started. Section 1. The high stakes of ethics. Listen, for fiduciaries and custodians, ethics isn't just some vague, feel-good moral concept. It's a strict legal requirement. And these ethical guidelines, they aren't just polite industry suggestions. They're officially codified SASB standards. As of August 2022, they're actually under the stewardship of the IFRS Foundation, which means they carry some serious weight all over the world. Investors and preparers globally rely on these exact standards to identify the kinds of risks that could, reasonably be expected to impact a company's cash flows and cost of capital. Moving right along to Section 2, Navigating Complex International Regulations. To understand why business ethics is such a critical metric, you really have to look at the constantly evolving, frankly, chaotic regulatory environment that asset managers operate in every single day. The SASB industry standard captures this reality perfectly. Quote, "Entities must adhere to a complex and often inconsistent set of rules relating to performance and conduct." I mean, just imagine being a multi-jurisdictional asset manager. You aren't just dealing with one regulator, you're dealing with dozens, all with rules that might actually conflict with one another. Simply figuring out what the rules even are is a massive operational hurdle. And this brilliantly illustrates the real minefield out there. We're talking about specific, high-risk areas where companies are most likely to face severe legal and financial jeopardy. Things like insider trading, tax evasion, and incredibly technical, opaque areas like clearing requirements in over-the-counter or OTC derivatives markets. A misstep in literally any of these areas, whether it's just due to a lack of internal controls or worse, outright malpractice, triggers immediate and severe regulatory action. Which brings us to Section 3, the cost of bad behavior. So how do we actually measure a firm's failure to navigate this regulatory minefield? Well, we look at the hard numbers. Now, what's really interesting about this is that specific metric at the bottom, FNAC 5110A.1, it requires companies to disclose the total monetary losses resulting from legal proceedings tied to fraud, insider trading, antitrust, anti-competitive behavior, market manipulation, and malpractice. It's a purely quantitative metric measured right there in the presentation currency. This is where the true financial impact of unethical behavior is laid absolutely bare for investors to see. But the exact accounting details here are actually pretty fascinating. What's included? Basically, all monetary liabilities to opposing parties. We're talking fines, settlements, civil judgments, regulatory penalties, disgorgement, restitution, the whole shebang. But what is explicitly excluded? The legal fees incurred by the company in its own defense. And that's brilliant, because by stripping away those legal fees, this metric forces companies to reveal the pure, unadulterated financial penalty of their ethical breaches. It isolates the direct hit of the bad behavior itself. All right, Section 4, Whistleblowers and Internal Controls. So, how do institutions actually prevent these incredibly costly legal breaches? Well, regulators often rely heavily on insiders. The standard points out a really crucial dynamic here. Enhanced rewards for whistleblowers may increase the number of complaints brought to regulators. Because some governments are now offering absolutely massive financial payouts to insiders who report fraud or market manipulation, the threat of external exposure is constantly rising. Basically, if a firm doesn't catch its own problems internally, an incentivized whistleblower will absolutely make sure the regulators catch it externally. This makes robust internal policies absolutely vital. Let's move to the next metric, FNAC 510A.2, and see how this builds into a functioning pipeline. These are the essential steps of a robust internal system. It starts with having internal compliance programs, sure, but then it gets highly specific. Is the whistleblower hotline actually managed by an independent third party? Is the hotline number published front and center in the corporate compliance manual? Are there clear internal incentives for reporting? And what are the exact methods for submitting tips? It's all about ensuring a company's internal alarm system is actually, plugged in and functioning.
And finally, Section 5, protecting long-term shareholder value.
So the crucial point is, why do these SASB standards require such granular reporting on ethics? Because compliance isn't just about keeping executives out of jail, it's a fundamental business strategy. Entities that ensure regulatory compliance through robust internal controls build vital trust with their clients. They increase revenue, and they protect shareholder value by minimizing those massive legal losses we just discussed. Good ethics directly correlates with preserving long-term capital. It really is that simple. Which leaves us with a pretty provocative question to wrap things up. When you look at the institutions managing your hard-earned capital, you have to ask yourself, is your asset manager proactively protecting your investments through robust internal controls, or are they just sitting around waiting for the next costly legal proceeding to hit? Thanks so much for joining me as we decoded this standard in today's explainer, and I highly encourage you to look a little closer at the hidden compliance mechanisms within your own financial institutions. See you next time.